What's up guys, Bulls and the Bears here with the midweek update video with the wheel strategy. This week so far has been going pretty well. The account's at a nice level, although it is down today. If you look at the account, down $100. It was a lot worse though. At 9:45 we were down over $400. But we've clawed back a lot of those losses, and this is because of Match Group. They had earnings last night. It did not go over well. The stock was down as much as 11%. We'll take a look exactly when we get to the charts. But it was down over 10% intraday today, but then clawed back a lot of those losses. It's still down, but it was a hell of a lot worse earlier. So I'm thankful for that bit of recovery. Comcast, too, is having a really nice day, up like 3% today, so that's helping the account as well. If you look at the weekly chart of the account balance, the high was yesterday up to $22,987. And intraday, it doesn't show you every little tick. Like this 1 week look is only showing you the balance at the top of every hour. So look, 10 a.m., 11 a.m., 12 p.m., 1 p.m., 2 p.m. So you missed everything in between those hours. Intraday on Tuesday, the account was over 23,000. We broke that next $1,000 milestone. But we just couldn't hold it, unfortunately. But we're close. We're obviously trending in the right direction. Here's the longer term look from the inception of when I started this wheel strategy over again for 2024. Trending in the right direction, up near the highs, doing pretty good. It's just that today is a bit of a red day. But we got to talk about the positions. Here they are. Here are my stocks. CSIQ up $550. You love to see that. Got to talk about that one quite a bit. SOFI down a little bit, just 100 shares. I'm working with it. I'm still collecting a ton of premium on it, and I'm loving it. Match, this is the problem. Down $400 on just 100 shares. So that means it's around $30 per share, a little bit less, because I'm in at 34 bucks. Comcast down $91. This was down over 200. So Comcast is up like 3% today, a really big push, clawing back a lot of my losses, and I was actually able to sell a covered call against it. Here are my open option positions. I have my Comcast covered call here. Looks like it's still flat, no gain, no loss on it. I just opened it today. My CSIQ calls, they are in the money, so they are down. They expire this week. There's still time left. We'll see what ends up happening. I have a Nike covered call against my Nike Leap. My Nike Leap here is down 100 bucks. My covered call at 95 is up 64%. So I still have some more premium to capture before I close that early. And then I have a SOFI cash secured put that I opened today. So I made a few moves today. A Comcast call, a SOFI put. I also closed some trades. So we got a lot to talk about. So let's just get into it. So we're going to start with Match Group, the stock that had earnings last night, the stock that is down 5.5%, which isn't good. But as you can see with this daily chart and this daily candle, it was a lot worse than where it is now. The candle's green, but look at this lower wick. We were down to $27.66, which means we were down over 12% intraday today. Yikes. Basically, they beat revenue, they beat earnings, that's great, but they didn't provide great guidance. They're losing paying subscribers on Tinder. That's been declining for a little bit, for several quarters in a row. It happened again. They don't seem to have a good outlook this year. They think that's going to continue. Their guidance on revenue was lower than expected. I listened a little bit to their earnings call, and they're talking about trying to think of innovative product lines to get more people to subscribe to Tinder and pay for Tinder services. So, yeah, we'll see. I guess they got a couple more quarters of work to do when it comes to improving their numbers. But right now, the stock isn't favoring very well. It dropped quite a bit. But we made some moves with Match Group today. I had a covered call, sold at the 35 strike in preparation for earnings. It did not go my way. So obviously this call way up here got crushed. So I closed it early. So what do we got here? This was the original covered call that I sold on May 1st. One contract, got 40 bucks for it at the 35 strike. I was able to buy that back today. I bought back that call for $1. and profited 39 bucks. So I can get rid of this line here. No more covered call. I got a lot of premium for it, so that's good. But as we stand right now, not much I can do. But that's not the only thing I did today. I didn't just close the covered call. I also decided to sell another put. I sold a put on Match today. When it was getting crushed, I was saying, yikes. Let's see if I could take advantage of these rapidly increasing put premiums and try to buy another 100 shares at a much lower price to try to help my average. Now, usually, this would be doubling down on the position. And part of my game plan is I want to wait for a stock to be down 30% before doing such. This was not down 30%. I sold a 26.50 cash secured put, which was right here. So right about there, 26.50. And according to where my position is now, a drop to 26.50 would be a drop of 22%. So not quite the 30% drop that I'd look for to begin to double down, but kind of close, 22%. That's still pretty ugly. I wouldn't mind trying to buy some shares down there and try to help my average. I opened that put intraday when we were at the low, basically. We were at $28, 27 something, 27.60. And I sold the put a little bit out of the money at 26.50. But then, as you see, we had a massive recovery, rallying over $2 per share. This put at 26.50 decayed 90% in that 1 hour of rallying. And you can see that here. I ended up buying back that put in just 2 hours time. So you can see I sold the put 4 hours ago, and I bought the put back 2 hours ago. So it was a 2 hour window. In the contract, I was able to buy it back for $1. Sold it for $10, bought it back for $1. 90% capture of the premium, a single day, so it was a day trade, and there we go. So I managed to snag a little bit more premium on Match in the form of a cash secured put that decayed, and now we're kind of just waiting. I would look to maybe sell a put if it ends up going back down to those massive lows. Hopefully that doesn't happen. We seem to be having a little bit of buying stepping in. So, but right now, with a position at $34, we're probably not going to be able to sell calls for a little bit. We got to see if we can fill this gap first. So this could be a position that I hold for another quarter, another 3 months until we get earnings again. Or maybe it just rallies over the next couple of weeks. That would be fun too, but not a good day for Match. Next, we'll look at Comcast, which is having a really good day, clearing the highs of the last couple of weeks. We were up as much as 3%. Right now we're up 2.6%, pulling back a little bit from the highs. Zoom in a little bit here. So very nice day. A nice strong push. I don't even see any news, but I'm not going to complain about it. We had this big drop here after earnings last week, so earnings haven't been great. SOFI fell 10%. Comcast fell 6%. Match fell as much as 12%. Right now down 5%. All my earnings so far have not been good. And guess what? I have another one this week in CSIQ. So fingers crossed, pray for me. May the trading gods have mercy on my soul. But Comcast, thankfully today, having a nice day, up over 3% at one point. And I saw that as a great opportunity to try to sell a call. So I'm in at $40.50 up here. 100 shares at $40.50. And Comcast has been around $38, $38.50 for a while. Too far below my average to sell calls until today. We had a really nice surge as high as $39.70. I was less than $1 per share in the red. However, Comcast is not that volatile. And even though it had this massive surge and got really close to my cost basis, I mean, here's my cost basis, and we weren't that far away, I could not get enough premium at the 40-50 strike. It's just not volatile enough, unfortunately. But I decided to break a rule. Yay! I broke a rule. I sold a call below my cost basis. There it is. I did it. I sold a call at $40 instead of $40.50. So 50 cents below my basis. Why did I do this? Couple reasons. One, I always like to sell calls on my positions. I always want them to work for me. In this past week or so, it hasn't been working for me. It's been at too low of a price to sell calls. 2, the stock was up over 3%. And this call expires this Friday, so it only has a couple days left. Comcast up over 3% today at the time I sold the call. That's pretty extended. It would be reasonable for it to pull back. I am not optimistic that it's going to just keep going Thursday and Friday. So let me sell the call at 40 for the high likelihood, in my opinion, that it's probably just going to come back down and fizzle out where it kind of was at 39.80. You know, I don't foresee this thing just having all of a sudden 7% rally in a couple of days. So I'm playing the statistics there, saying that it's extended. And the third reason is, even if Comcast does continue and it threatens my covered call and goes beyond $40 a share, I'm very confident that I'm going to be able to roll it out and up. Because again, this call expires this week. It only has 3 days on it, 2.5 days now. So if tomorrow comes and Comcast is even higher, it only has like 1 day to expiration at that point. So I'll easily be able to roll it out to next week, which is not a bunch more time. That's very much in my wheelhouse, next week. And up to the next strike higher. That's pretty guaranteed. I'm pretty confident I can do that, unless there's a massive overnight move where I can't even do anything about it. But if it's an intraday thing and we get to $40, I should be able to roll it out to next week and up one more strike to the 40.50 level. And at that point, the covered call will be at my cost basis and I'll be fine. So I know that even if it does go against me and I'm pressed against the wall, I can get myself out of it. So with those 3 reasons, that's why I decided to go ahead and sell the call below my cost basis for a solid 18-cent premium. So that's done. That's going to be paying me for this week. That's great. I got some more premium coming to me for Friday this week, and it's shaping up to be one hell of a good week. So there's Comcast. Now let's move on to CSIQ. Let's talk about CSIQ because this thing is doing very well. Very well. We got as high yesterday as $17.94, almost $18 per share. Crazy. And I'm stuck with a covered call at 17. Now, I say I'm stuck because it's in the money and I can't really wiggle out of it. But in reality, it's a good thing. I mean, the call is above my cost basis, so my shares are in the profit. Being assigned to 17 will yield me a profit. It's just that CSIQ is higher than 17, and I'd love to capture that upside that it has right now, but unfortunately, if it stays up here, I'm not going to be able to really roll it out and up. But that's okay, because I'd be realizing a $300 profit on my shares, plus all the premium collected up to this point, which has been a lot. I think it would be a altogether total gain of around $700, all said and done, if I get assigned to 17. There's still tomorrow and Friday, so it could roll over. But so far, this past week or two, week and a half, it hasn't been rolling over. It's just been staying at its level or moving higher. So props to CSIQ, but we still have 2 more days before we can ultimately see what's going to happen with this position. Very, very good here. Very good. I've been very happy with this position. You do see how I have this descending trend line here, which, we kind of hit yesterday, which could be why we didn't get much higher than $18. So, this position, the stock is still not strong. It's still weak. I got to be cognizant of that. I put myself in a good position to benefit from a dead cat bounce or something like that, but I don't see this thing just starting an uptrend up to $25. I got to be realistic. It's still a weak stock. I'm trying to get in at a nice price and then get out a little bit higher for a solid trade. If I have to get out at 17, I'm happy with that, and I will keep my eye on it to get in again if it comes back down to $16, $15. So CSIQ is going well. It just needs to stay well for a couple more days. Next, we'll go to SOFI. SOFI, we have our 100 share position at 750. I had a covered call sold at 750, but I was able to close that today for a profit because SOFI was down a little bit. I mean, it's down right now, 0.64%, but it was down even worse this morning, down to $6.93. So my call decayed a lot at 750. I believe I sold it for 10 cents and bought it back for 1 cent. 90% capture of the premium. It's only Wednesday, so that's perfect for me. So no covered calls on SOFI right now, but I did sell a cash secured put. And guess what? I sold this put when SOFI was at $6.98, like somewhere around here. $6.98, $6.99. So this put was technically in the money, but basically at the money, and I decided to sell it anyway. Even though the strike was technically in the money and SOFI's price was lower than where I'm saying I'd buy it at, I still decided to sell it because SOFI has been holding the $7 level very nicely. There's a good chance that this put can actually expire worthless even though I sold it in the money. As you can see, we rallied out of $7 after I sold it and my put became out of the money. So it already showed some support again at 7. It is coming back down, although still out of the money. And even if it does come down and I do get assigned to 7, I'm happy. That's what I want. I've had 100 shares on SOFI for like 2 months now. And I've been selling puts very frequently and just haven't been getting assigned, and therefore have been stuck with just 100 shares, which is cool, but it's not giving me a ton of premium as a 3, 4, 500 share position would be giving me. It's been playing ball very well. Every week I've been able to sell calls and puts, and it's been doing very well, expiring worthless every time and closing them early, realizing a ton of profits on these premiums. But again, it's just 100 shares. If I've been doing that this whole time with 500 shares, I'd have so much more money. So I'm looking to increase this position. With just 100 shares, I'm looking to get another 100 at 7. It's solid support, as we know. SOFI has been holding up between 650 and 7. So yes, I'd be down to pick up some shares at 7, lower my cost basis to 725, and have 200 shares. The bulk of my position, however, I would like to get at 650. So I'd have 200 shares up here at 725 if I get assigned, but I would like to get 300 or 400 more shares after that at 650, and that would bring my basis down below 7, and from there I'd be selling calls at $7 with a 400, 500, 600 share position. So that's the plan, just trying to get a little bit more onto this position with 200 shares by selling a put at 7. And so far we're at the money, so it's anyone's game. We'll have to see what these next 2 days do. But that's it. But that was new today. So adding more premium to the week, just like the Comcast call. So that's great. The last thing to talk about is Nike. Actually, the second to last thing. Nike, nothing really crazy going on here. I have a covered call at 95. My leap was purchased at 93.64. We're below that level, so that means my leap is in the red. But I have a covered call at 95, which has not been threatened. Nike's down a little bit today. 2 days left. Let's see. It's about 2%. My covered call is 2% out of the money, so I think there's a good chance that Nike does not end up getting to $95 and my call will expire worthless, or I just close it early for a profit. And in which case I'd look to sell another call for the next week, the following week, at an even better strike, hopefully. Maybe 95 again, but hopefully 96 or even 97. I'll have to check the options chain, but nothing new here, just kind of waiting it out as Nike trades around $93. The absolute last thing is CVS. This is something that I've been talking to you guys about. I don't have the buying power to grab a full position, but I've been interested in buying some shares. Starting a small position with just 10, 20, 30 shares as it's at these low prices. These prices that I think you just can't pass up. So that's what I've been doing. And I've been kind of flipping those shares for profits. So I originally bought 40 shares down here after its initial earnings drop and then sold them for a $40 profit. Then I bought 10 shares here and sold them yesterday for a $10 profit. So I sold it for $1 per share gain, but I only had 10 shares. So it was a $10 profit. And now that CVS is coming back down to 55, actually it got worse than that. I just missed it. I'd look to maybe buy some more shares again at 55 or lower, which I guess it got down to 54.70. I just wasn't paying attention. I would have loved to pick up some shares down here, but I will keep this on watch and just continue to pick up 10, 20, 30 shares here and there And in the event that it does sell off more than that, I'll look to keep adding to it until I get to 100 shares and then wheel CVS at a price that I think is pretty damn good. So that's kind of my game plan, just playing around with CVS with the full intention to wheel it should it get to that point. All right, guys, that's the midweek update video. I hope you enjoyed. We have some stuff going on this week, that's for sure. We've already locked up $67 in profits, and we have another $196 left to be collected by Friday. So a very good week for sure. It's just a matter of how it all shapes up. We'll see what the positions do. Do I roll anything? Does anything get assigned? Yada, yada, yada. Come back at the end of this week and I'll let you guys know with the weekly recap video. So until then, guys, have a good one. Thanks for watching. If you enjoyed, hit the like button, subscribe for more content, and I'll see you all next time.